Fintech platform MoneyLion coming into the spotlight, partnering with new show Beast Games on Prime Video. Viewers can enter for a chance to win a slice of a $4.2 million giveaway. The show has helped propel MoneyLion to the _1 free finance app in the iOS App Store. This is also coming on the heels of Gen Digital's plans to acquire the company for roughly $1 billion. The deal is set to close in Gen Digital's fiscal 2026. For more on the story, let's bring in, on MoneyLion, let's bring in CEO Dee Choubey. He joins us now here on set. And thank you for being with us on Fast Money. We love having guys who have an insight into these kind of new emerging technologies. So let's take us through the MoneyLion story and why this whole deal with Mr. Beast could be a massive game changer, not just for your company, but just for fintech overall.
Well, first of all, thanks for having me. I started MoneyLion in 2013 with a vision to be in the hands of 30, 40 million Americans, helping them make better financial decisions. MoneyLion is a consumer finance marketplace, right? So we help consumers pick their best credit card, their best personal loan, their best mortgage. We have first-party products like our digital wallet. And if you think about fintech and the evolution over the last 10 years, the reason we exist is because the incumbent financial institutions sometimes make these financial decision-making a little bit tougher on the everyday household. So if you think about where we are in our evolution, we wanted to get scale, right? So if you look at Mr. Beast, Jimmy Donaldson, he's got 600 million followers, right? The first episode, we partnered with him and Amazon for Beast Games, that while people are having fun and playing these games, let's also educate them about financial wellness, about how do you open your first investment account, how do you think about dollar cost averaging, how do you think about retirement, how do you think about the next best financial product for you. And what we realized was that it was a perfect complement, that for millions of Americans who self-identify as struggling with finances, putting a financial services, a financial literacy content platform right in front of them while they're getting entertained is probably the best way to drive positive financial outcomes. And we love the scale. It's the #1 fintech app, 90 million views on the first episode, right? So we met all of our objectives from a KPI perspective. And in the meantime, we introduced our brand at a scale that we hadn't done in our 13 years of existence.
That's some crazy visibility going on.
Well, it's funny. I watched the first episode. It was actually pretty entertaining. I don't mean actually, but it was really interesting. The product integration was really interesting, too. But, Dee, let's talk about this. Let's not bury the lead here. So about a couple weeks ago, your company got bought. Now, when I think about what's going on over the last few years, it was kind of like a fintech winter. We saw another deal, I think, over the last week or so, too. Talk to us a little bit about why some of these interests are stirring a little bit. Why now?
Yeah, if you look back to 2020 and 2021, the pandemic really propelled financial technology. We solved solutions for millions of Americans when the money center banks were a little bit on the sidelines, right? That's been the story through the GFC, and that was the story of the pandemic. And that opened up the IPO markets. So a lot of financial technology companies either used a SPAC or they went directly and listed themselves in the NASDAQ on the NYSE. We did as well. And then after that, with the interest rates going up precipitously, the ZIRP environment ending, a lot of these financial technology companies that really kind of relied on either private capital or newfound public capital to grow, all of a sudden had to find religion and profitability very fast. And they were, for the most part, left for the dead, right? So, you saw companies getting an 80%, 90% drawdown in their share prices. That happened to us. But what it forced us to do was really use the last 3 years to get to profitability, get the right operating margin, get the right customer segmentation, so you could ultimately bring back to shareholders an incredibly profitable financial profile. So we were growing 20 to 30% at increasing margins. And once that happens, it opens up the aperture. It increases the surface area for a lot of optionality. You could stay public yourself. You could merge. You could partner. You could do different deals. And you could scale the business that way. And I think that's really where we are in the inflection point of the fintech evolution, if you will.